What's up, guys? Welcome back to the channel. Today I'm going to recap a mechanical trade with you guys. Now, before we get started, I've been on holiday. I'm not that tanned anymore. I was very tanned when I came back in Holland. On the airport, someone was like, dude, you can also be too tanned. And I had to laugh. But so I've been to Corfu with my parents, my brother and my girlfriend. So let me quickly show you some pictures. It was really, really nice there. There we go. Some more pictures. So basically, yeah, this was my holiday. I had a great time. I refreshed. I obviously have more pictures, but these are just a few. If you don't follow me on Instagram, just type in this and you can get to know a bit more about my personal life, trading, etc. So yeah, that's it, guys. It's good to sometimes go to a new environment, to refresh, get new ideas, and to just really relax. So that's what I did. I had a lot of fun there. Now it's time to work for the coming months before I leave again. Bit of a trader lifestyle, I guess. But yeah, that's it. All right, so we're looking at the Euro-CAD chart, and this is recently one of my favorite pairs just because it behaves very, very well. So before I'm going to show the exact setup, let's take a look at the market structure. Obviously, we're going down. There is a slight downtrend, and it has been going on for quite some time. As you can see, 8 February. So that's quite a long time. And if you go back, it's even longer. What's interesting about recent price action is that we leave clean highs. And as soon as we take out a low and we close back above it, we get a retracement. Look at this. We make a new low, retracement. We make a new low, retracement. So it kept happening again and again. And on this particular day, I went long. Multiple reasons, of course. My profitable setup was evident. So I always take those trades. But in terms of context, if we take a look, we took out a low and we closed back above it here. So if we look back at what happened previously, as soon as we closed back above a new low, we got a bit of a move to the upside here again. So I was already expecting like, okay, the market is behaving that every time if we get a new low, we get a bit of a reaction to the upside. What's also interesting is that we have perfect equal highs above market. And what we know about equal highs is there tend to be liquidity resting above the highs. People that sold in this area have the stops above. And if we break this particular area, there's going to be a lot of buying that potentially can get trapped. So this is a key area, and the market tends to gravitate towards key areas of liquidity. So when I was buying in this area, we essentially had a false break of a low, and we had two equal highs above market. So that really, really gave me a long bias on this particular trade to be like, okay, we're going long, and especially because we closed back above this low. We did it very strong and aggressively. So that's a bit about the market structure, but look at how I analyze the structure and see, okay, there is a bias to the upside. Of course, I take every trade that fits my plan, but if there's a clear bias, like in this case, a double top above market or failing to make new swing lows and then closing above, I use these things as a bias so I can potentially risk more on a particular trade, because if there's a strong bias, I tend to win, and my win rate is between 70 and 80% on trades where there is a strong bias. So I really risk more on those trades to increase performance. So let's take a look at the actual setup. All right, so we're looking at the hourly chart, and I've put in some lines. Really simple. I bought here, stop went at the green line, and this was my target. Now, in terms of risk to reward, this was around a 1.1, 1.15 R, I believe, that I made from on this trade. But But if we take a look at my statistics in this pair in my trading setup, there was almost a 66% chance of price hitting target before hitting stop. And that's really important. So the odds of me winning based on my backtest are 65%. My R is a little bit higher than when I lose. So I win 1.1 and I lose 1. And also look at the bias. I know from my journal over hundreds of trades, I know that if there's a clear bias, instead of the 65%, it goes up to 70, 75% in this particular pair. So the odds of winning on the trade were really high for me. So the risk reward doesn't have to be crazy, guys. If you win more often than you lose and you win the same as you lose, that's an edge. It doesn't have to be that big of an edge, guys. Take that with you. Now, let's take a look at the trade. So on the hourly time frame, we do have some form of an accumulation range, with this being the spring, this being a change of character. As you can see, look at this retracement to the upside. We haven't seen it anywhere, only here, but that was still in the structure. As soon as we actually started the downtrend on the hourly time frame, we haven't seen such a reaction. Then we took out the low, and then we quickly made a new high. And then we also, which was really important, which I showed you on the daily time frame, this was the key low. It lines up with this touch. It lines up with this bit of structure. And what's interesting is that we just blast through it and we close above that key low. And also these areas. So that really showed me, okay, this is bullish. I looked at my plan. It fits my rules. So I went long at a red line, clean and simple. Now, a lot of people might be like, why are you buying up here? There's a clear supply area here, which you can expect a reaction from, which it perfectly did in this case. So why are you buying up there? From testing and testing and testing, I know I'm better off buying up here than buying at a lower price, simply because I often play momentum, and often I get a bit of a retracement, but then it shoots up on winning trades. And if I play for a better entry down here, I tend to miss the trades. So that's why I just buy a breakout. I don't buy a retest, but that's me. For your style of trading, it might be different, but it's always worth investigating this, because a lot of people think, oh, should I buy the breakout? Should I enter here? Should I enter here? Why don't you just test it? It takes some time. It might be boring as shit, but it gives you the answer. It gave me the answer that I should just be buying up here. So that's what I do. I know what I have to do. But if you're not doing the testing, and if you're not asking yourself these questions, you're not improving, and you don't know what to do. And if you're not clear on what to do, you're going to make mistakes. And then from one thing comes the next thing, and before you know, you've blown an account, basically. So that's a tip right there, guys. Research, investigate what works better, work on it. This knowledge just, it didn't come to me, like it fell on me. I just backtested and gathered data. I looked at my journal to figure out what's the best way to trade my setup. So that's why I did. Now, when I enter such trades here, I always highlight the key areas in the way of my trading. Of course, I did highlight this. Why? Key supply zone, naked level. Next to that, I also highlight the retest area, not because I entered there, but because I like to see how price behaves. That to me is the retest area. So this is the supply zone. And why do I draw that there? It's because then I know what to expect. I know I most likely get a reaction of this area, which I did. This is the last high before we really broke this structure, the last bit of resistance, also in line with that structure. So I write that down as well. I put it on the chart. Then I just wait. I don't manage my trades at all. And I like to see good behavior when I'm in it. So we make a low. As soon as we make a new low, we immediately shoot up. So to me, that's good. Even though we're grinding down, to me, that's good behavior. We make a new low and immediately we shoot up. We leave a double top we go down, we don't make a new low, but now we close through the zone and retest it from above. It's at this particular area that I know, okay, this is probably going to be a winner. We cleared the zones, we can't make new lows. Every time we make a new low, there's absorption at the lows. We broke the equal highs, we stayed above there. This supply zone has already been tested multiple times, so it's probably going to basically crash through it like we did. As you can see here, we closed above. Yes, we retrace a little bit, but it's just to these old highs and off we go to target. So planning is really, really important. I know when I should be long. I know where I buy. I know where the stop and target goes. I know the key levels when I'm in the trade that I have to watch. I don't do anything there, but it just gives me like, okay, there's probably going to be a reaction here. Don't do anything. It's normal. I don't need it, but I like it. And if you're someone that's hesitant when they're trading, this might help. Just draw in the key areas and just see how price reacts there. Don't do anything, but it gives you a bit of control, I guess, a feeling of control, because you're prepared, like, okay, this box, we probably get a reaction there. This area as well. And it gives you a bit more clarity about the trade. Now, my target was the green line. Why did I put it there instead of the double daily top, which was here? Really simple. I have backtested the targets that I had previously instead of the double top. And I know based on the stats, based on the statistics, how often it gets hit. So yes, in terms of price action, this was the better target. And as you can see, as soon as we hit it, we go down. That's what often happens with clear double top. So that's why this, from a discretionary standpoint, from a market structure standpoint, this is the target. But I play my statistics, and that's here. So that's why I did it. Could have gotten a bit more out of the trade. Guess what? I'm journaling. I'm journaling if I, over the long term, should be taking this as a target instead of my statistics. Are you doing that? Probably not. Something to do. I'm always journaling, guys. In this trade, do you want to know what I journaled? I journaled the outcome if I entered at a retracement. So I journaled, what if I enter here with a stop there and a target there? That's what I filled in my journal. I filled in how much would I've made if I chose for this target. I also filled that in my journal. I filled in the previous week trend if it lines up with my trade. I fill in print screens. I fill in the maximum drawdown that I had when I was in the trade. I filled in the key zones. Everything has been filled in, guys. So it's one trade, but I get a lot of information from this one trade. And if over 100 trades, I can see in my journal that I'm better off targeting the technical target instead of my statistical target, then I'm going to target that one. And then I increase my edge a little bit over time. And then if I see I'm better off entering at a retracement or scaling in there, then I increase my edge again a little bit. And step by step, I become better. Even after almost 6 years of trading, professionally trading right now, I still work on this to become a better trader. And so should you. So hopefully you liked this video. Subscribe if you did. I'm almost at 800 subscribers, which I really, really like and really appreciative of. So yeah, thanks for watching, guys. See you in the next video.